The reason we're seeing so much on natural capital is that companies are increasingly recognizing that natural capital as a business and investment priority. It's an important one. And they're recognizing that it is essential for long-term profitability, enterprise risk management, and sustainability. So this next session, we'll dig into how large-scale institutions and asset owners can build natural capital into their strategies, onto their balance sheets, and into deal flow, and what all of that has to do with regenerative agriculture. So as you're reflecting on your screens, I'm going to ask our panelists to make their way to the front of the room and join us up here. Please welcome David Bennell from TIFS, who will be moderating the session, along with Cristina, Katrina, and Paola. Please welcome to this stage.
Here we go. We're still waiting for one of our colleagues who just got mic'd up to come up. David Bennell, as you can tell from TIFS. And I just want to point out my colleague, Tim Crosby, right here, who you might have heard yesterday. He's also in the room. If you have any questions about TIFS, please come find us. Welcome, Cristina. So natural capital, Sarah, thank you. I mean, if you don't know what natural capital is, by the end of the next 40 minutes, you should have a decent idea, at least from the point of view of these three experts. I want to sort of riff on what Louisa just said. For those of you that are here in the room, congratulations. I actually had dinner with 4 other people who ran to an Uber to the after party, and I've only seen 2 of them so far this morning. So I won't name the 2 that are in the room, and I really won't name the 2 that didn't come. But this won't be a mind-bending conversation for early in the morning, particularly if you're hungover, but it's an important one. We use strange words in economy like real assets or real economy. In today's world, you might think, yeah, well, what does real asset even mean? It's the sorts of things that we see every day in our lives and that are incredibly essential, right? Infrastructure, land, water, et cetera, et cetera. And that's, if you will, natural capital too. I mean, it seems weird we have to give a new name, kind of relatively new name, natural capital, this thing called real assets. But you may also have heard the term real economy. You know, I don't know what the fake economy is. You can maybe tell by my accent where I'm from. We're dealing a lot with fake stuff these days. The real economy is the same thing. It's the building blocks of everything that we do. When you do things like mortgage-backed securities, it can collapse an economy. Real economy stuff, real asset stuff, natural capital stuff, air, land, water, trees, the very building blocks of life and the services they provide. So that's natural capital. There's a little bit maybe of a code switching happening where we don't, some of us, use the term ESG anymore, and there might be a little bit of code switching that might be natural capital to some people. But you should have a better sense of what at least these 3 leading firms are doing around their own use and then application of the concept, and really the proof is in the pudding, as they say. So, kind of enough about that. I'm going to go in sequential order: Cristina, Paola, Katrina. We're going to sort of have a bit of a riff around why each firm has really dug into natural capital from a strategy and investing perspective, and then invite them to interact with each other. And you should, and we would, welcome questions. We appreciate questions that are civil. They can be challenging, but civil is most welcome. And then I know that Sarah may have a few as well from online. Sound good? Is that why you're here? I see some heads shaking. Okay. You're here to sober up? I think, Rachel, that's what you said. No? Okay. All right. So here we go. So about 5 to 7 minutes from each person. Sorry if you can't see me, but you can just look at my handsome face up on the screen. 5 to 7 minutes from each of them on, so why natural capital in investing and strategy in your firm? Cristina, do you mind going first?
Thank you. So pleasure to be here. So first of all, I'll tell you a bit about Nuveen Natural Capital, what we do, what we are. We are unusual. We're farmers plus finance. We've been investing in farmland and timberland for about 30 years across 70 different crops, 12 different geographies, 3 million acres. So on a farming level, we've got about 30 years of experience, and whilst I might be here in Brussels today, the majority of Nuveen Natural Capital is actually in the field. They're managing the farms, they're agronomists, they're water specialists, and they're interacting with the farming communities, either the tenants or the crop managers, and so on. That's really important, because whilst asset owners, pension funds, institutional capital, and so on, invest in us so that they can get diversification from their portfolios instead of equities or fixed income. They might invest in us to get an inflation hedge, and they might also invest in us to get carbon benefits, water benefits, food security benefits, and so on. So that's why they invest in us. And how we deploy and why sustainability and kind of the fundamentals that we've been talking about today are so important, how we invest and how we farm. It's for 3 reasons that I'll give you, and 3 approaches, 3 words: holistic, grounds up, and pragmatic. Holistic, first one. When we invest and when we farm, we have 3 pillars that we're taking into account all the time: nature, climate, people, those 3. People includes production. We're unapologetically aiming to produce as much as we can, as efficiently as possible, but without the negative externalities on nature and climate. Nature including biodiversity, soil health, water. It's that focus on production and productivity is key, and it's also the essence of making our farming communities profitable. So that's the holistic. Carbon, which we've talked about a lot today, is not our only god, but it's one of them, but it's not our only one. Second point, pragmatic. Second point, ground up. The ground up is important because we have principles in how we invest and how we farm, but it's not dogmatic. So it's principle-led around regenerative practices, but we leave the local communities to decide based on soil type, climatic conditions, and the actual crop. We've got 70 different crops that we farm. And we're nudging, not judging. So we do have principles that we worked with the Nature Conservancy of what good is for us on regenerative farming, but it's a nudge, not a judge. Because we believe that the grounds up and the experience of those 30 years of the farmings in the local communities is fundamental. On that grounds up, my third point is pragmatism, pragmatic. We're not striving only, and the conversations have been practice and outcomes and so on. We're not, again, letting perfect be the enemy of the good. We're not waiting for methodologies and for global consensus on emissions, removals, methodologies, and so on. We're just trying to get on with it. We know what practices are good. As I said, we've got those principle-led approaches. We've been informed by the Nature Conservancy. We're not, and so we're just trying to get on and implement it. We are trying to look at outcomes too. For example, we have programs in place at the moment on our horticulture properties looking at microbial activity to ascertain which cover crop is better for soil organic carbon, which one. We know, based on the data, of which crop we think leads to better microbial activity, but it's not conclusive. We've been running regenerative pilots for 8 years on some farms in the US Midwest. We only now have some conclusions from a portfolio, from a basket of practices that we can achieve about 8% increase of soil organic matter in that. Which one exactly of those practices, or which combination of practices led to that increase, we're not sure. We can't attribute causality. But what we know is that in general, those practices are good, but the causality we don't feel we're able to prove out. So that pragmatism and just getting on with it is really important, often quite difficult to communicate back to investors. That time and some fluidity is important, but holistic, pragmatic, and grounds up is how we invest.
Wonderful, thank you. So for those of us that are parents, or any of us that had parents, how many wish that you'd been raised nudged, not judged? I mean, I love that. Nudging, not judging. Paola, why were you nudged or judged?
Oh,
why,
I'm sure both at some point.
It's actually a therapy session. Tell me, how do you feel about being nudged and not judged?
Okay, so I will carry on. So I'm Paola Almeida. It's nice to be here, and I lead the food, water, and ag portfolio for Pegasus Capital Advisors. We have 2 very large sustainable development investment funds accredited by the Green Climate Fund for infrastructure development in the Global South, 40-plus countries that we can invest in, of which a lot of regenerative agriculture or regenerative systems interventions in food, ag, and water are a critical component of it. Prior to that, I led innovation for Mars, worked for Mars for a number of years, and I think that's important because part of our approach is to make sure that we build solutions that are fit for purpose and fit for context, but also being very mindful that they need to bolt on to a scale system, which was the point you made earlier, around efficiency and a system that's producing, good or bad, for 8 billion people around this planet. And that really needs to resolve not just for calorie optimization, but nutrition equity. And so, you asked why are we doing this? And Pegasus was founded for a veteran of mainstream markets. Craig Kogut had one of the founders of Apollo, mainstream financial instruments, had this epiphany 25 years ago that there is a nexus and a crisis brewing up that we need to be very mindful of, which is the intersection of food, water, energy, climate, and health. And we need to find solutions that help to optimize for that, and it's not only possible to make money scaling those solutions, but you can actually do a whole load of good driving that conversion. And so the intent here for the firm in these funds, and these are blended finance vehicles, they create an ecosystem and a finance stack, assembling various players around the table that can sort of relay race in this intervention, because that's what's going to be required to create the right scalable solutions. And we come in at the tail end to flank the scaling up of these interventions. So these have to be proven solutions. They have to be able to really drive significant benefits, especially given the governance and the accreditation that we have with the Green Climate Fund. All of our projects are verified by gold standard, so they need to pass very serious due diligence and governance protocols and metrics, not just at the time of the investment, but throughout the lifetime of those projects. We're long-term investors. We stay with these investments for a very long time just to make sure that there is no going back once we place a bet on the intervention, because they are the right interventions for the system. And so the key here is to say, look, we have a lot of science and data and technology in the system that just hasn't been put to scale quite yet. And that's especially true in the Global South. And we have an opportunity to help these countries leapfrog and make a very meaningful contribution, not just in driving food security and nutrition equity for their own people, but for the region and for the globe. And so we look for complete models of intervention when we're driving a lot of our investments. They're structured, and again, I like to say, and this is something you implied as well, which is fit for purpose and fit for context. It has to be grounded in the reality and the maturity curve of where each of these food and ag systems and these models are on their journey. So sometimes you have brilliant technology that's just simply not practical in some places. And the business model within these interventions has to be resilient. And this was a point that was brought up yesterday. I think João one of the farmers made it early on. It's about making sure that you can drive the scale interventions and that the numbers prove out in resilience in the business model. And that's really important because I think all of you here, and you know, congratulations to all of you who have been on this front line of regenerative ag and regenerative systems. You've proven that it can be done. Now we're on the verge of saying, can we do this at scale, replicable around the world many times over, and make money at it? I think this is the phase that we're in right now, the scale-up phase. And that point is really important to the investors, because we have money that's very interested in this space, but they're all asking the right questions. Can we take roots? Will it have the right results? Is it the right intervention? And is it sustainable, not in a sustainability standpoint, but a business model perspective? And so I think these are all things that we look at to make sure that we build the insulation and the resilience from within, so there's no doubt as to what we're driving.
Brilliant, thank you. So fit for purpose, fit for context. I also want to shout out these two gentlemen right at the front at a table by themselves. You get an A++ just for being up front and so engaged with us. Thank you. And we're going to call on both of you multiple times. Katrina, over to you.
Thank you. So good morning, everyone. I'm Katrina Hayter. I work for HSBC, where I'm Global Head of Sustainable Land Use and Supply Chain. I think probably HSBC doesn't need much introduction, but just we're somewhat different. We're a global bank. We operate in over 60 countries, and I think what's unique about HSBC is that it really does cover the breadth of the globe, really, truly in the East, truly in the West. And that gives us a great ability and a great opportunity to sort of finance the transition for this sector and lots of different sectors. So I'm going to actually use the framing I heard from you on a workshop I took part in earlier this week. And you said the what, the so what, and the what now. So the what around natural capital for HSBC, I think we all know the statistics, the 51% of GDP, the 58 trillion. But for agriculture and land use, that is incredibly acute. Because this is a sector that has just such an outsized impact on nature and also climate. You know, it's responsible for a third of greenhouse gas emissions, and as we solve that energy transition, that impact gets greater. And also the other striking thing I find about the sector is it's just so underserved and underplayed in terms of finance. There was a great stat from the World Bank that said only 2.4% of climate finance goes to that sector, and that's astounding given what a source of low cost climate action and nature action it can be. And I guess my role at the bank is really to help the bankers and our clients look at how do we finance that transition, how do we scale up the green finance. And we've got a target of 750 billion to 1 trillion for sustainable finance. And I would like that sector to have more than 2.4% of that. But there's a lot of challenges in that. So on the what now and what are we doing, and what are some of the innovative ways that we're trying to finance that transition in the sector, I thought I'd start with our top level, big set piece really, which is the joint venture that we formed with Pollination to create climate asset management in 2020. My colleague Carl Atkinhouse is here, and he heads up one of the two strategies. There's a natural capital strategy, and then there's a carbon strategy within it. They've just closed their first vintage on these strategies, and they have 1 billion of assets under management, and a considerable amount of assets that are in the regen ag space. There are big projects, I think, in Spain, in Portugal, in Australia, and I think the portfolio will likely be completed with an investment in the US around regen ag. So that's a big set piece that we have. Another, I think, a really exciting, more in the blended finance space that we've done recently is a partnership with HSBC India. and the Agri 3 fund, where we've been able to use our commercial capital and Agri 3 funds partial guarantees to make 50 million USD available to smallholder farmers in India for climate-aligned activity. And the reason I love this so much is because this is directly going predominantly to women farmers who previously didn't have access to finance, so it's really increasing credit penetration there. It's making differences not just in terms of agricultural efficiency and the environment, but it's transforming rural livelihoods and the communities there. And it's a bloody good book. You know, there's really low defaults on it, so it makes perfect sense. And that's a great example of being able to, you know, normally that's quite a hard sector for us to bank. Being able to work with Agri 3 Fund in that blended finance model, I think is really fantastic, and I'd love to do more of that. And then finally, another quite different mechanism, but one I think that's got great potential for nature, natural capital, and agriculture is outcome bonds. So if you don't know what outcome bonds are, I'm sure many of you do, but they're a construct by the World Bank, and essentially they're there to channel capital to sort of underserved, either social or environmental projects. And we were lucky enough to do an outcome bond in Brazil with the World Bank. It's their largest ever outcome bond. It's focused on reforestation of the Amazon biome. It's predominantly on degraded cattle land. And I think the bonds are around 225 million, but 37 million of that is being used by Mombac, which is reforesting these degraded lands, working with communities, purchasing land, reforesting, producing carbon credits, which are then able to then serve the debt on the bond, and create carbon credits that then can be offtaken by Microsoft. So, and I think there's great potential in that model to do much more in not just for nature preservation and conservation, but also for sustainable agricultural production. So hopefully watch this space. I'm sure there'll be more we can do there. But that's just a highlight of some of the few things that we're doing. But they're all quite different, and they all have an element of real commercial capital being deployed to scale the transition for the sector. Which needs to happen pretty quickly. And money is just a commodity after all, so I think we should just think of it in those terms. We want more of it to flow to this sector.
Katrina, did you mention Microsoft in that?
Yeah.
This is fascinating. So I started my career at Microsoft 187 years ago, in the other century before this one, and I co-founded the Microsoft Green team with a guy named Mike Eddy. And now, this isn't a Microsoft commercial in any way, but I think that's really, I didn't know that. So
yeah,
now the company is doing things in a very sophisticated way beyond our getting permission once a month to have a speaker come in like one of these folks and talk about some environmental issue. So, boy, things are changing. I'm hearing real consistencies, and this isn't staged. We did have a natural capital workshop with these three leaders and a number of other people 2 days ago, it seems like a year ago, upstairs. Are you hearing thematics across the three of you? And if so, are there any questions you want to ask each other or things you want to tease out from what you're saying collectively?
Can I just build on a point that Katrina made that I think is really important? And it's, we've often treated nature as a separate, or food systems or water systems separate than mainstream investments. And I think we have plenty of data in the system right now, and you alluded to this in your points, that $44 trillion of economic value is today dependent on nature, directly or indirectly. And if we don't safeguard or provide sustainable access to these natural resources that are generating this economic value, many other financial instruments that are currently in the market will no longer be viable. In fact, actually, for many businesses, it provides us a license to operate. Many industries today are talking about water schemes, land rights schemes, and that has everything to do with trade-offs that we have been doing within the system, not consciously. I think today the conversation is very obvious that, we ought to start making conscientious decisions in how we allocate these resources, how do we deploy them, so that other assets can remain viable into the system. And I think many investors today are starting to realize that this is not just smart to invest in this space and allocate a percentage of their investments in natural capital, in natural resources, but it actually is a mitigation mechanism to safeguard other investments and allocations that they also have. And so I think this is a conversation, an opportunity that we have to start bringing to bear, because we've proven concept. We are full on in the process of proven scale for many of these interventions. Now we're in the scale-up phase where we need to start doubling down on the business models that are coming forward so that it's very clear. There's no debate, right? And I think when you said the what, so what, now what, yeah. I think everybody knows the problem we have at hand. It's not, we don't need to do activism and advocacy to the extent that we had before. Now we're in the process of having to say practically and tactically, here's what makes sense in these regions of the world. And let's just be also clear and honest in some of these conversations that, and I think this is what you were saying, one size doesn't fit all, which is why we can't be prescriptive in some of these interventions, but we can be prescriptive in the expectations we want to see out of the system.
I saw Cristina. Yeah, I just saw you interact a minute ago to something. Go ahead, please.
Yeah, no, something you said about how identifying where and how to deploy capital. We use one tool. We use natural capital accounts on some of our farms, which we believe is one way of holistically measuring the ecosystem services that go beyond just the productivity on a given farm. And we believe that, for example, the wildflower strip or the lake that one maintains, the floodplain, has an ecosystem service that is not captured on a P&L, a traditional financial P&L. The wildflower strip enables a pollination. It actually supports the rest of the productive land. We are planting 10,000 trees in Romania, in Constanța, where the wind just, shovels off the Black Sea and is causing a lot of erosion. 10,000 trees in order to safeguard the rest of the productive land. But on a traditional financial statement, that planting would be considered an operating expense. It's considered a cost, and the question would be from investors, why? What is that a drain on my investment? So we're using natural capital accounts to try to prove out in a dollarized form, because that's the only language that our investors understand, in a dollarized form, what we believe that supporting land and those other wildflower strips, the regenerated land, the cover crops even, and so on, what they provide, and that's helping us allocate time, resources. We also take into account the cost of maintaining these lands. It is a cost. There is an opportunity cost. It takes it out of production. But we believe that a natural capital account is one very holistic tool to help us allocate capital on a holistic way across nature, climate, and people.
Okay, so I'm going to tee this up. We're going to open it up to questions in just a minute. So we used a joke in the workshop a couple of days ago. Thou shalt not should on yourself. Okay, so don't not ask a question either of us now or a little later that you leave Brussels, or if you're from Brussels, you go back to work and say, God, I really wished I'd asked that question while I had the opportunity. So anybody else want to ask any other things or make any other points before we open it up? No, look good. And Sarah, I know you might have some as well from outside. If you just, great, perfect. I'm going to write them down as best as I can. We're going to take all the questions we have right now at once, and then we'll respond as best we can. So gentlemen first, and then you, and then we'll Wow, what a gentleman. They're trying to figure out, are you just scared? You don't want to go first? Oh, okay. His mic's not on, I don't think.
Oh, very good.
You can just ask it. No.
Okay,
Yay.
perfect. Have you figured it out? Yes, thank you. Great, Jochen, thank you very much for the...
Do you mind just saying who you are?
Yeah, Jochen is my name, Jochen Hauf. I used to represent a company which I'm currently not, so I leave it at that. It's just me. Yeah, thanks for the session. And Paola, I had two things. You said that many corporates now see it, or that we should see it as this natural capital investments as safeguarding our other asset investments, and that we need to double down now. And I couldn't agree more. My question is a little bit the political environment we're currently in. All the money you deploy so far has been raised, I would say, in another era. And now we are having the UN foundations or institutions under brutal attack. We have the European Union being basically the next target of the US administration to take down. And do you feel that now we have enough corporate intelligence and reasonable decision making that big corporates basically do still see this and the logic of safeguarding investment also within Europe, for example, not only in the global south, which will be even more difficult currently, right? We see how development aid is being slashed for military expense. We see all these developments. So going forward, where do you raise the money? Are the corporates coming in?
We'd call that question we call that the elephant in the room. Thank you for asking the elephant in the room question. We will definitely, I don't know if we'll answer it, but we'll attempt to respond. How's that? Is that fair? Okay. Yes, sir.
I'm going to try this, but my voice is gone from yesterday. Harry from Rabobank.
Are you just getting in from last night's afternoon?
You know what? I'm actually not drinking at the moment, so this is all just self-inflicted from talking. So
go ahead.
Thank you. That was actually probably, well, no offense to the other speakers, but that's one of the best panels so far. So thank you for that. You were saying that part of the discussion with the investors is like this triple, quadruple returns. Regenerative agriculture brings health, security on the farm, resilience. How are you also diversifying your investments to allow that to happen outside of the farmed environment? So if health is one of the things is returning, are you investing in preventative healthcare? If better products for consumers is part of it, are you investing in processing or marketability as well?
Great question. Really a systems question, and as somebody who works for TIF's, a systems intervention model organization, thank you. I owe you €50 for the question. Okay, those are two incredibly powerful questions that could take a week to even get into, but who wants to go first?
I want to address the first question.
The elephant in the room question.
The elephant in the room. I'll just kick-start it, and then I think my colleagues will have a position. So I'll go back to the point I made earlier, which is fit for purpose, fit for context. I don't say that lightly. This is a game of relevance at the minute, and we need to start having conversations, not just in Regen Ag, because Regen Ag in the absence of a regenerative system is a step, but it doesn't scale or drive the transformation. But this is about ensuring that we are relevant. And most food systems, if we look at it, have been built and designed with data back in the 1970s. We have a treasure trove of data now that's available that's telling us very different outcomes, right? So this is the equivalent of living in the 21st century and running with a flip phone or an iPhone 1. You can do it. It's possible. We do it every day. There's many of people that do it. It just means that many other components and accessibility of technology are not available to you. And some parts of life will just not be lived when you're operating with a flip phone or an iPhone 1. And that's fact. So if we take that analogy, we know we have science and technology that are not purposed today. These are important interventions that weren't just developed out of curiosity from some scientific mind. There were real problem statements in the system that we're trying to resolve for real solutions to help us be fit for purpose and context and relevance. And we look at many of, you asked about the corporations, many of their portfolios, they're not relevant to what we know today, not just for the food and ag systems that we operate, but also human health. And all of these corporations, I know, are very intent in ensuring that they create the portfolio of the future. It doesn't happen overnight, though, right? Because these are wildly successful portfolios that sell to millions of people around the world and are very profitable. So we have to be real about the pivot that needs to happen. And also, some of these interventions that we're talking about here at scale, we're talking about converting systems that can't change overnight, right? So if you want to close a gap on cocoa shortages, coffee shortages, potatoes, some of these trees will only come online on full productivity 7 years from now. That's time that the system has to allow for that to come in. So that's my answer. I think they're all sort of trying to work through it. They're just trying to figure out, how do you balance the today with the tomorrow?
That was wonderful. So Katrina, go ahead, and then I know Cristina, I think. So that was a nice little weaving in of your question about systems. So just to point out, we're not blowing you off, we're weaving. It's a tapestry. Katrina, go ahead, and then Cristina.
I just wanted to sort of put a note of optimism in the air, because I do feel optimistic, because what I hear from our corporate clients is that this isn't just a nice to do, or we're doing it because a regulation that we have to comply with, or our scope 3 emissions. They're doing it because it makes commercial sense. Your number one priority, if you're a food brand, a retailer, or working in the food supply chain, is to provide your product at the right time, at the right price, in the right location. And we literally cannot do that unless we invest in natural capital, unless we shift our systems to ones that are more regenerative, more resilient. So for me, I feel that it's, I've got a lot of hope. And I don't necessarily see, corporates moving away from that commitment. I think people are getting on with it anyway. Sustainable finance makes sense. It's cheaper if you're doing these sustainable activities and you're building your resilience in your business. Why wouldn't you have a product or access a product that has lower fees attached to it?
Cristina, you may have close to the last word. So Sarah, is there anything are there any questions coming in that are slightly different from this before I give the floor to Cristina for the close to the last word? Oh.
I think there might need to be follow-up questions. So yes, give Cristina.
Many questions coming in, but we'll stick with this.
Yes, and find them on the coffee break.
Okay. Cristina.
Yeah, I'm likewise optimistic. I think that the movement is there. It's not going to reverse back. There is commercial sense. The data is becoming better. We've heard earlier today very, very rich insights on that. It's becoming better. It's becoming cheaper. MRV kind of programs, historically very expensive, are coming down. Monitoring, reporting, verification for practices and the impact are coming down. So that's important too. To your question on systems, we do believe in investing also in storage facilities and primary processing where it makes sense for our partners and farmers. So we do have a wine producing facility in California. We do have plenty of storage facilities around the Midwest and US Midwest. We do have investments in the primary processing for almond production, primary production. So we do believe in some level of, but it's got to be where it makes sense for the farmer and where it makes sense for the margins and where we can do it sustainably as well.
Whomever just did this slide, thank you. So if you want to learn more, before I thank the panelists and thank the amazing RFSI team, this is a report that TIFS wrote with Pollination, funded by the Rockefeller Foundation, and this is the slide that everybody loves. If you look at that curve, I won't suggest this is natural capital too, but I think you're getting the sense that, at least I'll speak for me, I see regenerative agriculture squarely in a conversation, any conversation about natural capital. So this is called Financing for Regenerative Agriculture. You can look it up. Pretty good. At least we're told it's pretty good. It'll give you a really nice sort of overview of what smart people like this and some other people in this room, by the way, and many others told us this looks like right now and where it may likely go or arguably should go. And then, not to embarrass one of our panelists, Cristina wrote a really, really nice, readable piece, Managing Natural Capital with Wisdom. I know it's a year ago, but it's a bit evergreen, and evergreen means, you know, it's lasting, it stands up. Managing Natural Capital with Wisdom, which you can also find on this thing called the internet. So, shouldn't be that hard to find, but you can find Cristina, and she can maybe tell you a little bit herself. So, thank you very, very much. We're actually getting off on time. Props to Sarah, Rachel, Bjorn for an amazing conference. And thank you all for being here, hungover or not. Thanks so much. And to our 2-star pupils in the front, I mean, A++. Cheers and thank you so much. Oh, you don't, should I take it with me? All right, cheers.
All right, big thanks for that discussion. That was fascinating, and I am not lying. There were at least 6 or 7 questions in there, so lots more to discuss on the topic, so do please find those folks during the coffee break. We did have some responses to the quote, nature as capital, regeneration as profit. I won't share them all, but one that stood out to me and was covered in that last session is if regeneration is profit, it needs to be measured, quantified, and valued, which is, I think, that last part is really what we're working on as a sector now.